All right, let's talk about Bitcoin and the entire cryptosphere. It's been called digital gold, the future of finance, and depending on who you ask, the biggest Ponzi scheme in history with the biggest rug pull the world has ever seen in the making. Exciting times indeed for smart investors. But today we are not listening to just anyone. We are diving into what one of the most respected minds in finance has to say about it, Eugene Fama. If you're not familiar with Eugene Fama, he is the Nobel Prize winning economist, best known for the efficient market hypothesis, EMH.
Let me begin by thanking the Economics Committee for granting this year's prize in economic sciences to me, my colleague Lars Peter Hansen, and Robert Schiller.
The theory that market already price in all available information, making it nearly impossible to consistently beat them. Yes, the same Eugene Fama, who has agonized every Finance 101 student with this concept. If you have ever taken a finance course, you've probably spent hours trying to argue against it, only to be met with cold, hard statistics that makes you question your entire investing strategy. Nevertheless, it is part of the finance education. And let's just say he's not exactly Bitcoin's biggest fan. In this video, we are breaking down his arguments, why he thinks Bitcoin might be doomed, and more importantly, how you can still profit regardless of where the market heads. Because let's be real, every crash, every shakeout in any market or asset class offers opportunity for those who understand value and know the asset class in question. So, is Bitcoin really on its last legs? Or is this just another round of the same fear-mongering you have seen for over a decade? Chapter 1. The Bitcoin surge and political influence. Bitcoin's price action in late 2024 was nothing short of spectacular. After years of speculations, ups and downs, and an endless cycle of hype and fear, Bitcoin once again made headlines by reaching record-breaking prices. But this wasn't just another bull run fueled by retail FOMO. This time, politics played a significant role. The driving force behind it? None other than Donald Trump. As Trump surged back into the political spotlight, his administration's stance in crypto became a defining factor in the market. Unlike the Biden's administration, which had been hesitant or outright hostile, according to Trump, toward digital assets, Trump's messaging was clear. Bitcoin and crypto played a role in his vision for America's financial future. And the crypto market seemingly held a place not just for the new president, but for his wife Melania as well. But those early adopters saw something that the mainstream financial world had yet to grasp. Bitcoin was different. And then something strange happened. Satoshi Nakamoto, this mysterious genius, the architect of the world's first decentralized digital currency, disappeared. Completely. Not just from the public eye, but from the digital world itself. No more emails, no more posts, no more signs of life. It's almost poetic, really. The father of Bitcoin vanishes, leaving behind his legacy to his children that would later be worth trillions, while allegedly holding 750,000 to 1.1 million Bitcoin still, worth tens of billions today, in untouched wallets. Not exactly a great look for the legitimacy of a project when its founder ghosts the entire world. And yet, the disappearance of Nakamoto only fueled the mythos of Bitcoin, making it even more intriguing. With or without its creator, Bitcoin wasn't going anywhere. Driven by financial incentives, the promise of getting rich quick, and the ever-present fear of missing out, FOMO, Bitcoin became the centerpiece of a new financial revolution. A famous slogan emerged among crypto evangelists: "Have fun staying poor." Basically, if you didn't buy Bitcoin, you were doomed to financial ruin, or so the crypto crowd claimed. Some would call this visionary thinking, others would call it pure greed. Either way, it worked. What was once a niche experiment turned into a global speculative asset, with people piling in, desperate to catch the next wave before it was too late. But unlike the traditional stock market, Bitcoin didn't have the safeguards, regulations, or fundamental valuation metrics to keep it stable. It was, and still is, a roller coaster. Despite its wild volatility and speculative nature, Bitcoin kept growing, eventually breaking into mainstream finance. Even entire countries started to take it seriously. El Salvador became the first nation to adopt Bitcoin as a legal tender, hoping to boost financial inclusion and attract investment. Japan developed clear regulations to support cryptocurrency use, creating one of the most vibrant crypto economies in the world. Dubai launched crypto economic zones, fostering an environment for blockchain innovation and investment. And, oh my God, even BlackRock couldn't resist reaching out for a piece of digital gold, like Mr. Burns from The Simpsons, scheming with his fingers. And, to be fair, it worked. BlackRock's crypto ETF has quickly become the most reputable and respected in the asset class, setting the gold standard of positioning itself as the one ETF to aspire the world's domination. One of this signaled one undeniable fact. Bitcoin wasn't just an internet experiment anymore, it was here to stay. But as with any financial revolution, the question remains who really benefits. And as we'll see in the next chapter, where there's money, there's manipulation and fraud. Chapter 3, the crypto monster. From decentralization to absolute chaos. With explosive growth comes growing pains. And the crypto world has had its fair share. What started as a decentralized vision for financial independence has mutated into something unrecognizable. The transition from Bitcoin's early days to the current NFTs, meme coins, and fantasy digital assets makes the romantic Wild West era look like a kindergarten playground in comparison. Scandals? Check. Fraud? Everywhere. Pump and dump schemes? Standard operating procedure. And let's not forget the infamous rug pulls. I love this expression, where celebrity-backed projects disappear overnight, leaving gullible investors broke and influencers even richer. The beautiful, rich, and famous have entered the space, and with them, the crypto market has evolved into something that no one seems able to live without anymore. But here's the dark irony. Who is really making the money? We've all heard the saying, in a gold rush, sell the shovels. But in today's crypto world, it's no longer just about selling the shovels. The same people who provided the tools to mine gold are also creating the gold itself out of thin air. It truly is a bonanza for a few lucky or very smart bunch of people. And the public? Well, where there are riches, there must be victims. It's a cycle of nature. No great fortunes comes with a few lambs led to the slaughter. But here's the biggest plot twist of them all. Crypto was supposed to be the ultimate tool for financial freedom, a rebellion against centralized control and governments. Now, according to Trump's latest crypto stance, governments are on their way to centralizing, regulating, and outright controlling the entire space. From Bitcoin reserves to stablecoin policies, the same institutions that Bitcoin was created to bypass are now moving in to take charge. Decentralization? Forget about it. The crypto dream may soon be reduced to nothing more than a government-controlled behemoth. Too much is at stake, and according to President Trump, it's now a matter of national interest. Just when you thought the crypto debate couldn't get more interesting, an economic heavyweight steps in. Enter Eugene Fama, Nobel laureate, one of the most influential minds in financial academia, and unsurprisingly, a Bitcoin skeptic. Fama isn't buying the crypto hype. In his view, Bitcoin lacks intrinsic value, which is a fundamental requirement for any asset that aims to sustain long-term viability. Without any real backing, like cash flow, corporate earnings, or tangible assets, he argues that Bitcoin is just a speculative bet, not a reliable store of value. Even worse, he highlights Bitcoin's extreme volatility, which makes it useless as a medium of exchange. If the price of Bitcoin can swing 20% in a day, how can anyone rely on it for day-to-day transactions? His prediction: a massive crash in the coming years as the crypto market faces reality. And it's not just Fama. The late Charlie Munger and, of course, Warren Buffett, two of the most successful investors of all time, never had a single word to say about Bitcoin, crypto, or its evangelists. To them, the entire concept is built on cult-like beliefs and hype-driven narratives, predatory sales tactics that prey on financial naive investors, a Ponzi-like cycle that only survives as long as new money keeps flowing in. Let's be honest, Munger and Buffett have always been right in the long run. Their assessment of crypto? The world's biggest Ponzi scheme. Or, if you prefer, call it the biggest rug pull in history, one so massive that even Disney's Aladdin would be impressed. Crypto's growth, fueled by an endless flow of fresh money. Let's have a closer look at the core arguments, the only reason the crypto market has kept growing. It relies entirely on new money constant flowing in. All coins, starting with the mother of them all, Bitcoin, generate no real cash flow or income. Their valuation isn't tied to earnings, dividends, or productive assets. It's purely dictated by supply and demand. And with a finite supply, demand is the only force driving the equation. But what happens when demand starts to wane? Well, it's simple. It's going down. And if it's going down, the story is over. But we humans are very innovative creatures. So what do we do when it's going down and the story is over? Well, we write a new story. Simple. New coins are invented out of thin air. Social media influencers pump them, venture capital firms dump them, Wall Street traders milk them. Rinse and repeat, the cycle continues until the music stops. But what happens to the crypto market right now? We haven't seen the main reversal yet. We have already seen so many new coins and rug pulls. The biggest fuel source right now? ETFs, steadily fueled by the largest private equity and venture firms in the world, ensure that real money keeps flowing into the crypto market and maybe, just maybe, Trump himself. Though, let's be real, he's likely more on the receiving end. Just ask Melania, than actively contributing to the equation. But his endorsement? That's worth gold. No pun intended. The perfect storm. Why the crypto bubble could burst. But here's what most people don't realize. Crypto was born out of the 2008 financial crisis. It has never lived through a true, prolonged global financial meltdown. One of the fundamental reasons crypto exploded has been cheap money to fight the financial crisis from 2008. The Federal Reserve's printing presses created a global liquidity flood, giving central banks, led by Japan and the ECB, a free pass to print money endlessly. But that era is coming to an end. Rising inflation is forcing central banks to tighten their grip finally. Cheap money is drying up. Without easy liquidity and endless speculation, what's left? A market that must stand on real fundamentals, something crypto has never truly had. And what happens when the funny money runs out? Crypto's inflated value must collapse under its own weight, like a house of cards. We predict a wave of forced selling, bankruptcies, and liquidations on an unprecedented scale could be on the horizon. Let's be real, it's not just for the crypto environment, it's for entire industries and asset classes. And the crypto market will be no different. And just like any speculative bubble in history, when the founders and influencers stop promoting, the price collapses, never to be recovered again. Just look at the endless stories of meme coins. And unlike real assets or operational businesses that still generate actual cash flows, buying any of the fallen members of the crypto graveyard is purely a game of hope. Hope that they will rise again. But here's the reality. Bargain hunting doesn't exist in crypto markets. Ask all the backholders of past rug pulls. Unfortunately, there won't be any crypto zombies rising from the graveyards. And if the vision of Buffett, Munger, or Fama proves correct, the mega rug pull, the mother of all rug pulls, could send Bitcoin and every other altcoin crashing to near zero, leaving millions holding a bag with nothing but shattered dreams and worthless digital tokens. Chapter 5. What should you be doing now? Speculating on Bitcoin's future is very simple. It's binary. Either you believe in it or you don't. On one hand, Bitcoin has cemented itself as the poster child of decentralized finance, gaining legitimacy in the eyes of institutions and mainstream investors. And yes, we haven't forgotten the argument of the miracle wonders of blockchain technology. On the other hand, its extremely volatile and uncertain regulatory landscape continue to make it one of the riskiest assets to hold. So, what's the smart move right now? Number 1, stay away from new coins and gung-ho promotions. The latest next big thing in crypto is likely just another pump and dump scheme waiting to implode. If you can't resist the temptation of quick money, then at least be honest with yourself. Treat it for what it truly is, gambling. But don't start whining if the rug was too small for you. Consider crypto ETFs, support BlackRock. If you still believe in the long-term vision, if you're still a staunch crypto believer, stick with low-cost, diversified crypto ETFs. BlackRock is more than happy to accept your real cash. But keep in mind, even ETFs can go to zero. Use the current liquidity to cash out non-strategic crypto assets. There's still plenty of liquidity in today's crypto market as of February 2025. And if you have questionable assets sitting in your portfolio, now might be the time to sell before the mega rug pull happens. Remember, when there's blood on the streets, that's when the real opportunities arise, and then you have plenty of cash and liquidity to make use of these opportunities. Final words: the future of Bitcoin, revolution or collapse. Some believe Bitcoin is the future, a decentralized revolution that will replace traditional finance. Others argue that it's one of the greatest speculative bubbles of all time, doomed to collapse under its own weight. Economists remain deeply skeptical, while crypto evangelists hail Bitcoin as the ultimate hedge against traditional finance. A paradox, considering the survival has depended entirely on the very system it claims to replace. Where do you stand? Let us know in the comments. And don't forget, subscribe to our newsletter for more insights, analysis, and real investing strategies. Thank you for watching.